Yeah, so this has been a big move in fixed income markets. The US 10-year Treasury yields up over 100 basis points from where it was just last September. And what we did over the weekend was to unpack in detail what's behind this big spike in interest rates, but with an eye towards what it means for the outlook going forward. And I'd say in terms of the drivers of the move, it really comes down to this higher for longer narrative that's taken hold in markets. Investors are both pricing in a more gradual pace of Fed rate cuts going forward, which we think makes sense. But more important than that, the whole distribution and skew of Fed pricing has moved in a more hawkish direction as well, with investors now reconsidering the possibility of a Fed pivot back to rate hikes again in 2025. And that extra layer of risk and uncertainty is contributing to a spike in term premium. By our calculation, the term premium has contributed 75% of the recent increase in long US rates. So with that as a setup, I think in terms of the outlook, it really comes down to whether you think this higher for longer narrative in the market is right or not. Might the Fed have to hike rates again? And there, I think we're just not seeing a strong case for that. When we look at the US economy, it's certainly looking resilient from a growth perspective, but we do think inflation is more likely to moderate than reaccelerate from here. The US labor market, for example, doesn't look particularly overheated anymore, and we're seeing potential for more disinflation in the pipeline from some categories like housing rents. So with that as a view, and with these much higher starting yields now on government bonds, we're seeing good value in rates markets at these levels, and that's true both in the United States and other developed market sovereigns like UK gilts, for example. So to bottom line it, we don't think there's a strong case for Fed rate hikes here. We're seeing good value in developed market government bonds, but we do think a careful risk management approach is relevant in the months ahead, particularly into this environment of high macroeconomic and policy uncertainty. Thanks a lot.